Welcome everybody to our monthly market update with Murdock Manwaring Company, a real estate group at Keller Williams Realty East Idaho. We are hitting the market update this month for, well, we're talking about this month, but it's for November 2023. These are all the market stats we've compiled for last month. And if you enjoy knowing how the market looks, please make sure to subscribe if you're watching this on YouTube or follow us on Facebook. We've got 4 little sections that we're going to deal with. We're going to do an overview of the stats. We're just going to kind of give you a high level. Then we're going to talk about a few little items inside the month. We're going to talk about what the inventory looks like. I would say hang out for that one. There's some really cool analysis that we've done on the inventory. What does it look like compared to closed? And lastly, how does Idaho Falls look just as an individual area? And so stick around. We'd love to have you. And Jeremy, you're up.
Well, let's do it. Let's jump right in because we want to know what are the number of homes that sold last year November to this year November. And we did see a decrease in the number of transactions or homes sold, 6.5% just that month from last year. It doesn't look like a lot, but that's a lot of individuals that didn't sell and didn't buy. And here's a quick look at over time. It's kind of a small number, but you can see January 2019, there was 145. And here we are, November 2023, 159. So not a huge difference between the year over year in the same months with the seasonality that we kind of see in our area. You know, last year, January was 127 in December, that time frame. And so we're still a little bit over what we have kind of seen in past years in these months, but we are seeing an overall decrease in the number of transactions. As we look at kind of some of the pricing, what are selling, we had a pretty good strong market over 500,000 the last few years, but as rates went up, we saw affordability go down, and so those upper end homes are starting to slow down. Kind of the days on market is extending, and so we're seeing less homes sell on that price range. But here are everything 115 homes under 500,000, and then a smaller percentage over that. But even above 600, we're seing that decrease quite a bit.
Nicole, have you got something to add to that?
Almost a non-existent market over 600,000. I mean, it's very, very slow.
But I'll tell you, we had more over a million sell than the last couple 3 or 4 months. So interesting.
Yeah.
Nicole, what have you got to say?
Yeah, the last slide before, you know how we talk about our market? I love to say to my clients, our market is just normal. If we look at 2023, 159, we look back at 2022, we look back at 2021, we look at 2020. If we were going to guess what 2020 was, our crazy year, doesn't it look like about 146 houses? And we're at 159. Yeah. So you look at the trends, and it's just normal. There's nothing scary. There's nothing crazy. There's nothing wacky. It's normal. I keep telling my clients, it's just returning to normal, which makes everybody happy.
That's a good point. So let's move on because we're, one month and doesn't really tell the whole picture. If we look at dollar per square foot from November last year and then November this year, we're seeing a decrease in that number of 1.5%. Now that takes in a lot of considerations, and it's not necessarily dollar for dollar, house per house, but it does give us an overall market idea of what's happening. Here's the year to date from the previous slide where we saw the 1.5% decrease. Year to date, January to end of November, we saw quite a bit decrease of just over 10.5%. And so we're seeing the number of transactions, number of home sales go down. We're seeing increased inventory, increased rates. So there's all these things in the market that are creating this compression on buyers. Affordability is difficult. Sellers don't want to sell if they have a rate under 3%. And so inventories aren't increasing like they have in past years. And it's kind of creating an interesting market for us. So
Jeremy, on that slide really quick, just a little interesting tip. The last 3 months, we've been down 12%. So I think the decrease is slowing as we catch up to the end of last year. So next year will be really interesting to compare this year to that year when the higher rates.
Got it. Anybody else want to have an insight to that before we move? Well, let's talk about the average price then, because last year we saw an average price in the market for the month of November only at 388. This year we saw 420, or we saw an increase of about 8%. But like I said, that 1 month doesn't tell us everything. So if we take a year-to-date look at that, we're seeing a total decrease overall. I think that probably leans more towards we're seeing more on the lower end sell than on the higher end. So it's kind of pulling the average down a little bit, instead of thinking, oh, wow, we're losing tons of value in the market. We're just seeing the averages kind of change so far. But
yeah,
that
I
is
don't think a lot of people are losing value under 500,000 that much anymore. So yeah, it is a little bit of a skewed stat.
But good to understand overall exactly what, if I'm a first-time home buyer, at least it gives me some middle point that I can say, well, I better be prepared at some point, right? Original list is sold. If I'm starting at 100,000 in 2022, I'm going to get 92,000. This year, we're in just the month of November, we saw that increased a little bit, which probably means we're pricing closer to what it actually will sell for. Sellers tend to shoot high to try to pull the market up to them, and buyers are pushing back all the time, right? That's the balance in the market. So,
and this one's really interesting when we compare to the next slide, because when we get to November last year, we were full into that rate shift, and the sellers were, I mean, it was heavy because it happened so fast. And so they were down to 92%. We're at 93, not a big change, because we're into a month that's similar to each other the year before. And year to date, we'll show you it's not quite like that because we encompassed a little bit more, but indicative of 2023 is this 96. That's actually pretty good considering we didn't have 5 or 6 months of really high list to sell. So that's a good sign. This is a really good sign.
Seeing that gap kind of decrease a little bit and close, so we're a little more balanced, huh? Days on market leading indicator, right? How long is it taking a house to sell? That's one thing we watch to know what could happen down the road. When it closes, we get data, but it's could be 60, 90, 120 days away. Right now, we know if active homes are going pending or going under contract, that stops days on market. So it gives us a good leading indicator of activity. Last year, we were at 62%. We're at 60 just for the month of November. Let's see if we...
Now, wait, before you move on from that, Jeremy, real quick. Interesting. This is our first month of decrease of days on market for the entire year when you look year over year. We've been increasing days on market, increasing over last year. This is our first month that we went down.
Yeah.
But we're showing also on a year to date. Yeah, we'll get to that in a second because it's quite a number. So when we look at the whole year, go ahead, Nicole.
One of the things that that leads into is we know that people who are buying in the winter just before the holidays, they're motivated to buy. People that are listing in the winter, they're motivated to list. So that stat just shows us if you're thinking of buying right now, the inventory is lower, but sellers are motivated to get rid of those houses. And so it's a great time to shop, and it's never too early. Call your agent to list.
Good point. And the people coming through aren't just out there on the parade of homes, are they? They are serious. So this kind of gives the look over the past years. In 2016, we were about the same days on market as we're seeing right now. But you can see it even in 2012 was the highest of 127 days on the market, just coming out of the Great Recession there. But even just a few years ago, we're seeing 54, 66, 88. Those weren't terrible markets. So it feels a little different now because of rates. Feels a little different because we're coming off the high of, the lowest interest rates we've ever seen. But we're just kind of getting back into a regular type of a market is what I would say. Here's your year to date days on market, where last year we were at 35%. This year we're at 58%. So we've seen an increase of almost 70% on days on market for
This
the
is that
whole
one
year.
that looks back and says in
Yeah.
2022, for the whole year, you're at 35, even for our whole year at 58. But then you go November to November, and holy cow, we're starting to line up.
Yep.
Yeah, the market has appeared. So the new
All right,
market
Chad,
is
go
there.
ahead on these next ones.
Yeah, so this one is a good little reminder of kind of our average type of home that we sell. I mean, the average home is between 2,400 and 3,000 square feet, and 2 to 3 car garage, under a half acre, 2 baths, finished basement typically, and we're seeing the price per square foot sold on those is about 142, and last year from 147. So that one's gone down. And as far as on the pendings, we are seeing that go up to 150. And on the actives, that has also gone up to 153. And there's 23 there. So we're typically, it's what we always see for the most part. You know, the actives, you always have it priced a little high, and then it pens for a little bit off the price, and then it sells for off of that. So anyway, so that's just a good little idea where things are.
Nicole, did you have something to add?
Yeah, so the average house, it has an unfinished basement. I know builders for many years have not been finishing basements. I would love to know the difference between a 2 and 3 car garage, blah, 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 finished basement and unfinished basement. What's the difference in price per square foot? Because I have a lot of buyers that say, why, why is it just as expensive to buy an unfinished basement? And I'm like, well, it's not really, but just having that stat would be nice to know. Difference between finished basement and unfinished.
I think a lot of that comes in for these houses here. Not a lot of new construction in this particular stat. So because it eliminates that new construction with having a finished basement. So yeah, that would be interesting to look at that. I'll see if I can look those up.
Yeah, I mean, I think from a dollar value, we're typically seeing that dropping, unfinished basements usually going to be about 30, sometimes 50 grand less in that type of setting. So
but if you add in new construction, you pay a little more for new construction. So does that balance a little bit? Who knows?
Mm-hmm. Yep. Okay, so as far as the declining market goes, are we in one? This is kind of the average price per square foot in that range that we've been looking at the beginning of the year. We started at 142, went up to as high as 157 in July, and then kind of went back down. We kind of, the peak was last year in March where we were at 172. So we're down $32 a foot from where we were then. Why is that the case? Well, because interest rates have gone up and they're trying to slow the market down and cool off inflation, which also cools off our appreciation and our demand. So, all right. So that was overview of the stats. Let's look at our snapshot of the month for Bonneville, Bingham, and Jefferson County. We had 183 homes that came on the market, which is 32% less than last month. The average list price is at $425,000, and list price to sold original is 99.96. So that's pretty strong. And we had 176
and
homes.
that's for Chad. That's if they listed and sold in the same month. So if you're priced right, you're going to sell, and you're going to sell for probably your list price compared to like 93 is what the average. So that's an interesting slide for people who want to know, do you have to price it right?
And average is the 93. Those of you that have been on the market for 3 or 4 or 5 months, you're probably going to be getting an offer of like 90%. So we know in this market and in pretty much all markets, if you price it right, your best chance of netting the most is by pricing it right at the very beginning and standing out there, and you'll get a top dollar price. So 176 homes went pending. That's down just a little over 8% from October, and 34% of the deals fell through, which put us at of the homes that went on the market, it's about a 20% of those withdrew. So it's a number that we think is too high. As far as new listings over time, we are down from where we were last year. Last year, we finished the year at 292. It'll be interesting to see where we end up, but we're probably gonna be pretty close to where we were last year. But
we're actually up from last month. I mean, in November of last year.
We are up from last month. Yep, and we were up in October over last year. Last year at this time was a way different feel in the market. I mean, it was just I mean, nobody knew what was going on, and it was just, I mean, it just kind of stopped. So yeah, it was a way different time. So, and then 42 homes withdrew. These stats are always very telling. 42 homes withdrew. Why would someone withdraw? Well, the average days on market was 104 of those that withdrew. So they're on the market way longer than the average of ones that sold, almost double. The average price was 486, which is over the average sales price. Average square foot, $193 a foot. The sold was 168, and they did drop the price, but not enough. And so basically, you have to be motivated to sell and find the market price. The market is not going to find you unless you are priced competitively. Is my take on that. So, all right.
It's sad to say, but if you're hoping for 2020 prices, 2020 earnings, you've missed the boat.
Yeah. I mean, we had that and it moved on. So anyway, Jess, you want to go into?
Yep. Let's take a look at what's happening on the market today. What's going on right now with what's out there? We currently have about 486 homes on the market. We're down a little bit over last month, which generally happens as you hit to the holidays. Remember this is when they go, oh, do I want to wait and put it on the market till after Christmas? That happens, always a little slowing. The average days on market of the homes that are sitting on the market are 86. Cumulative means that they've maybe pended and gone under contract to come back on the market. And what's that total amount of days on market? So you can see we have a little discrepancy, which means deals, when they fall apart, come back together. Right now, they're sitting on average at a current from the original to the current prices they've come down about 3.5%. So homes are trying to get down to where they can get an offer, and they've come down about 3.5%. Average price per square foot is 192. Our average selling is 168. But you'll see that when we look at the actual inventory, because what's sitting a lot is that above 600,000. We're going to see that sitting, and that average is generally because you have a higher price point. We've got 3 months of inventory sitting on the market. What that means is if we didn't have any more houses come on the market, and we sold at the same rate as we sold last month, we'd be out in about 3 months. That is indicative. Are we in a buyer's market or seller's market? This is still a seller's market. Anything below 4 months is still a seller's market, but it can feel a little bit like a buyer's market if you've, expecting the movement to be like what we had in the peak. Really interesting to see the breakdown. Now, for a long time, we were balanced on what kind of inventory was out there, as much below 500 as there is above. But I'll tell you, we're heavy. We're heavy down below 500,000, which is great because that's what our affordability is. We've got 298 homes on the market below $500,000. I mean, look at that, 300 to 400,000. That's an affordable price range, and that's the heaviest amount of inventory. So really interesting to see that. Yeah, Jeremy.
I'm thinking that with all the chatter about rates actually dropping next year, we may just be seeing a bit of a break tap. Buyers saying, I'm just going to wait till after Christmas and after the new year when rates go down because it's going to save me so much extra money, that we're seeing a bit more of that lower end inventory increase. But, first quarter of next year, it may just be a major, slugfest out there buying houses in that price range.
I think that's
You've seen that crazy video where there's the one agent running down the road all by himself at a certain price rate, and the interest rate drops and the buyers just come out of the woodwork. They're like, run for that house. So it's gonna create demand again, which is what the lower interest rate created demand last time, which raised prices.
Yeah. And everybody complained the prices were too high. If you want the best of both worlds, you buy when the rate is high and at the lowest price and refinance when it goes down. That's the best of both worlds. So now is a really good time to get a deal, especially right in a couple of these price ranges. That the upper end, lower upper end. I mean, we've got plenty to choose from. That 500 to 700, man, that is a painful price point right now. If you've got houses out there, we have a lot of inventory sitting there, and those days on market are starting to tick up. But you got a ton to choose from. If you're looking for $1 million plus house, man, there's a lot out there to look at. So just know when you come out on the market, this is important because if you have this much sitting, you're going into this pool. If you want to be competitive and you want to sell and not sit, you've got to be more aggressive. It's probably a time in those upper price range, not to say, hey, what's the actual market value? I might want to push down a little below if I want to get sold rather than sit. So let's compare this a little bit to what's selling. So take a look at what price points sell. So if you look at what price points sell now, what's really interesting is the 600 to 700 price range, 700 to 800. Look, 6 and 5 houses sold last month, but look at the inventory, 71 and 52 homes. That is the pain. There's a lot of homes available and not many are selling. So when you take a look at that, that is where you really want to go, oh, I got to be prepared for that and get more aggressive in those price points. Look at 8 to 9. One house sold last month. And how many 8 to 9? 13 out there. That's still not as painful as 52 when 6 sold. So
And aggressive doesn't mean dropping your price.
Right.
Aggressive means having your home in peak condition. It means having great marketing. It doesn't mean like, oh, I got to drop my house $100,000. Aggressive means you got to be the best.
yeah, it's not a time just to throw it on the market and hope, and say, you get what you get. Yep, exactly right. So anyway, this is what you want to look at when we say, don't look at the average to reflect. Jeremy says this, it doesn't reflect your home. Looking at the average of the market is not a reflection of your home, but this really is what's on the market versus what's selling in your specific price point. So let's look at the months of inventory in those specific price points. Here's how we get them next side to side. If you're under 500,000, the inventory is 2.6 months. So a balanced market's 4 to 6. So it's a pretty heavy seller's market under $500,000. If you move into that 5 to 700,000, you're into 4 months. We're moving into a balanced market, which means a buyer or a seller don't have an advantage. It's pretty equal. If you get into that 700 and to a million, 3.6. That's where this is a really, really interesting thing. It's 5 to 7 is tougher than 700 to a million right now. That's rough if you're out there. But look at over a million. If you're over a million, there's almost a year of inventory on the market. And that means you got to be aggressive. And you got to know that is a buyer's market, a strong buyer's market in above $1 million. So anyway, we'd love to talk to you about that, about your specific price point. Currently, we have 182 pending homes. That means they're under contract. They have not closed yet. The average price on pendings, which is a really good indication of what's happening right now, is $421,000, $415,000. The original price they listed at to what they were listed at when they went under contract was 95%. So those houses came down about 4.6%. Average price per square foot, $168,000. Took them about on average 66 days to get under contract. So let's take a quick snapshot of just Idaho Falls. So that was Bingham, Bonneville, and Jefferson counties all together. But what's happening in the boundaries of the 5 Idaho Falls high schools? In November, we have 95 homes sold, which is up over last November. So that's interesting. We've had more homes sell in Idaho Falls than last November. The average days on market is 58. The original list price to what it finally sold at, 96.3. Again, that's higher than the 3 counties combined. The current homes on the market are 293. There's a tightening of inventory right there in Idaho Falls. Their average days on market is 92, and they've come down about 3%, and they're sitting about 3% down from where they originally started. That's 3.1 months of inventory. So similar, but still looks like a seller's market in Idaho Falls as well. But we are seeing those homes will sell. If they're priced right, they will sell. And that's the stats. That's the market update for November. We hope everybody enjoyed it. And if you love this, please go ahead and subscribe, or you can go to mmcidaho.com and click on get the newsletter, and you can get these with the slides in your email, plus some other fun facts about our area. All right. Thanks for joining us.
Merry Christmas.
Merry Christmas. We'll see everybody soon.
Merry
We'll
Christmas.
do the final wrap up next month.
Happy New Year.